Because if you are an entrepreneur and you don't like paying taxes and you want to know what to do with your money, all the people I know that are successful are doing this thing called infinite banking. Ladies and gentlemen, welcome to another edition of the Coach U Show. Today, we have John Hutchinson, also known as Hutch. And Mr. Hutch is the man when it comes to infinite banking. And Hutch and I, we met at a mastermind a year or two ago with our joint friend, Caleb Williams, who you know is a good buddy of ours. And I learned so much from him on banking truths. And if you do a search on infinite banking and these related terms, you're going to see banking truths show up. So you know that Hutch is a legend. He's well respected in the financial services. It is an absolute honor, Hutch, to have you on our podcast.
Thanks for having me, Dennis.
And I know it's not as cool as surfing in San Clemente, but
well, I had to move inland to Laguna Niguel, the slums of Laguna Beach. But no, life insurance is one of those subjects that's not that cool. And when you unpack the infinite banking concept, it's all about building your own private bank with life insurance, which usually melts people's brain when they hear it because it's counterintuitive. Like, what?
So yeah, all my friends who are wealthy, they're onto this idea of like, what, life insurance? Wait, but life insurance is like they pay out money when you die, right? That's something like my dad would do a long time ago.
They do that. And at its core, it still runs on a life insurance policy. There's a reason for that. You mentioned some tax sheltering because life insurance provides a good for society in the form of taking care of widows and orphans. The federal and state governments essentially incentivize you to put money into life insurance products that don't expire. Not term. Most people think of term, which is like car insurance. I got 10-year term. But when you buy these life insurance products that don't expire, they last forever, like whole life, universal life. The extra money that goes into the policy over and above the basic costs do actually grow in a tax sheltered manner. And you can access that money at any time for any reason, not when you're 59 and a half, not when you're 65, and you can utilize that money and take it out totally tax free.
What seemed too good to be true for me was that by putting this money that's overfunded above whatever the policy is, when that goes in there, the IRS can't get it. A judgment or your ex-wife can't get it. And this money is protected. Explain that.
Yeah, I don't know about the ex-wife thing. That might be a little too good to be true. So like that's, but there is protection from creditors, and that's actually actually one of the assets on our. I'm a marketer too. That's why Dennis is having me, because I started in the really boring, old, stodgy industry of life insurance, where people used to go door to door collecting pennies and quarters for people's policies. And then it's still a very manual process. And I learned about digital marketing and learned about Dennis in 2014 and started going to traffic and conversion and studying up on this. And I realized, at least for the front end, I could have a one-to-many approach. I brought it up because as far as marketing, we were tying that into protection from creditors. One of our lead magnets, the things that people opt in for and we get an email address, is creditor protection by state. And it's actually a state-by-state guide that shows you how much protection your state. Nevada is actually, I happen to know, Dennis is in Nevada. Nevada is one of the holy grail states, which means the death benefit is always protected from the creditors of the estate, anybody suing the insured. But the cash value is also protected, 100% of it. And if you were to get sued by a creditor, if you have money in a savings account, they could attach that. If you have money in a brokerage account, they could attach that. If you have real estate, right? Even if it's an LLC, since you own the LLC, they could attach that. Now, there's benefits to Nevada LLCs too that we won't get into. I'm not an attorney. Don't play one on TV, but there are some definite planning advantages to living and doing your planning in Nevada, because when you're dealing with trust, your trust can live anywhere. A lot of people don't realize that. But the policy itself is protected from creditors in Nevada. Not the ex-wife stuff, though. I don't think that works. But from any outside creditors. Yeah. And the IRS thing is just like what we talked about. The federal government recognizes that if people don't do things to take care of their family from just an income protection standpoint, they're going to become wards of the state. They're going to get on welfare, because any tax policy is always done to incentivize certain good behaviors that the federal government deems as good for society as a whole. And life insurance just falls under that. Does that make sense?
Yeah.
Yeah.
All my friends, the big buzz has been when they're making money, they sell their company and they don't want to pay a ton of taxes.
Yeah.
They've been using this idea of infinite banking or to be your own bank. Why is that popular and how do you explain this? Because a lot of people will say, yeah, but I'm borrowing from myself. But that's not exactly accurate.
It's not, there's a lot there. Let's unpack it. Why entrepreneurs specifically love this concept, the be your own bank concept, in spite of it being attached to a life insurance policy, is because when an entrepreneur goes to like a traditional financial planner, all the rhetoric is about their financial future. It's like, put your money with me. We're going to lock it up in these things, do the 401k, the IRAs. When you're 59 and a half, when you're 65, when you're ready to retire, come back to me and I'll give you all your assets. Now, you and I both know, Dennis, whether it's digital marketing or any entrepreneur, that entrepreneur is like, well, what kind of rate of return are you going to get me? 8, 9? Who cares? My profit margin's like 30, 40, right? Even in manufacturing business, 20. Like why would I even bother locking up my capital for 8 or 9 or 10 even, right? I mean, you can get that because there are none of these age restrictions, but there's still tax sheltering. And the fact that life insurance is all about protection of the asset. It does have a return. It will grow safely. You don't have to worry about it going. It's like the famous quote by Will Rogers. I'm more concerned about the return of my principal than the return on my principal. Like maybe you could do better in the stock market last year. You could have than life insurance. But the year before, you would have gotten wrecked in the stock market or crypto market or whatever. You would have gotten wrecked. And so an entrepreneur still may have money out there for long-term growth, like in a retirement plan, but for their safe and liquid capital, they want it to have a rate of return. They want it growing. They want it keeping up or beating inflation ideally, but they want to know that they can get to it to instill in the programs that they know will get them their highest rate of return, which is almost always going to be within their own business. Does that make sense?
I see entrepreneurs that have enough cash that they can put it into the overfunded life insurance policy, but then basically take loans out against that and pay themselves back. Why would they go through the extra effort of putting money into that policy versus just spending the money on capital or putting it in some
just putting it in a bank?
Yeah, exactly.
That's why I named my company, bankingtruths.com. And if you look back there, it's actually on the back of my shirt too. It says, don't do what banks say, do what they do. And one of our earliest and probably most popular videos shows it's me actually going through screencast, looking through FDIC.gov. It's still public information, but they stopped putting it on Front Street. You can look line by line on their balance sheet to see what they're invested in. And they have cash, they have real estate, right? They have stock, but they have a lot of money. Like the two biggest banks in America, Wells Fargo and Bank of America, each had around $20 billion in what they called life insurance assets. And they actually titled it assets. And what's interesting is people think, oh, well, that's probably just the death benefit. It's not. It wouldn't show up on a balance sheet, right? In order to be on a balance sheet, that's actually cash value. And the reason why they do that are the same reasons our small business owners, our entrepreneurs would do it. Is because they get a better rate of return on cash. Like used to be before this year, I used to say, if you go to a bank, you're going to get a rate of return that starts with a dot. You get point something. It always started with the word point. And during those times, people were earning 4, 5, 6% in life insurance. Now, let's just say they got the same 4, 5, 6% life insurance. Like right now, you can go find certain high yield savings accounts, probably not from those bigger banks, but you can go find a savings account that'll pay you 5%. Okay, cool. Well, if they have any amount of success, even if they live in Nevada where there's no state tax, you're going to give away 37% of that. Now, all of a sudden, your 5% turns to 3. Well, if you earn 5% in life insurance because of the tax sheltering, you keep all 5, right? And then the other thing is, quite frankly, is just the death benefit of the banks, all those life insurance policies. You can't just go get them on anybody. It's like you can't just walk into Merrill Lynch and go, I'll take life insurance on that guy. He looks like he's about to go, right? You actually have to have a bona fide reason. Otherwise, like anybody who watches Dateline, right? It's like, oh, there it is. It's the life insurance. You have to have a bona fide reason to get life insurance. The banks, all those policies are on their key executives. Now, what's really, really interesting is if you Googled right now, Walmart life insurance lawsuit, you realize that Walmart, which is a business, they're not a bank, they're not an insurance company, but they had the scale where they could really don't do what banks say, do what they do. And you'll see that in the late 90s, there was a little bit of a scandal because they started taking out secret life insurance on just like cashiers and janitors, non-key employees. And I'm not recommending that anybody do anything illegal, but for the entrepreneurs out there, they are usually the biggest driver of their business. And there may be one or two or a handful of people that also, if they were to pass away, if they were to become too sick or hurt to work, right, that would have an impact on their. If you kept $250,000 of cash at Bank of America and you died or a key employee died, well, you got 250 in cash. But if you have 250 in cash in your own bank, designed with life insurance, somebody dies, you're going to have 7 figures, right? All of a sudden, it's just that extra leverage. It's not the main reason, but it's one of my mentors told me this, and I love this saying. It doesn't matter what benefit you like most about life insurance. You get them all. You can't like just choose this one and not that one. But yeah, hopefully that makes sense. And we should talk about the borrow thing, because that's its own animal, because people hear the word borrow, right? And they just see red, like, I don't want to borrow my own money and I'm trying to be debt free. Like, tell me what your impression is, because it's probably very similar to what your audience is thinking.
Well, yeah, generally we don't like the idea of borrowing because we're slaves. We want to be entrepreneurs because we own our stuff and we can pay cash, but there's good debt and bad debt. And I do like the idea of being my own bank where I'm able to borrow against that, not take the money out. I think most people have the idea that in the bank accounts, you take money out or you put money in. But the idea of borrowing against something gives me leverage, because even if I earn 3%, but I have this multiplier, it's like options, right? It gives me a 10x multiplier. If I can use $1 to borrow the value of 10.
You touched on a lot of the key points, and it's obvious you're educated about this. So yeah, nobody likes bad debt or debt for debt's sake. And one of the things I ask anybody who's considering this concept is to reframe what debt is. If I have an asset that's compounding for me, let's use that 250 number. If I have 250,000 of capital, it's compounding for me. It's guaranteed to go up every year in a tax sheltered environment. And if I cash out that asset, it's no longer working for me there. It may be working for me elsewhere, but it's no longer on that compound interest curve, which only gets better and better over time. Like if you think of a compound interest curve, it's steeper and steeper the farther to the right you get. As soon as you take it off that curve, like if you withdraw and just spend the money and use it somewhere else, whenever you put it back, because people often also think like, I don't want to have to pay it back. But if they didn't, like in their savings account, they're spending, saving, they're on the spending saving cycle. It's like they never not refill their savings. It's just a different way of looking at the same cash flow structure. If they were to pay back money to a withdrawn savings account, they always have to start at that crappy part of the compound curve. And the really, really good part, that super steep part over here, they never get those last couple jumps because they reset the compounding. You handle that by borrowing against it. Now, obviously, everything has to pencil. You have to be borrowing at a rate or lower than what it's growing at long term. But as long as we can facilitate that, right? Then you mentioned complexity. Then the extra complexity is worth it, because now, even when you're using your assets for other things, whether it's investing in your own business or timely real estate investments, it's working over there, but it's still working on your compound curve. And as those investments cash flow, right? Rather than just put them in a bank and have them loan them out 5-10 times on the dollars and give you crumbs, and then the government wants half your crumbs, right? You just pay down the lien against your the money never left the cash value on that cash value, and you end up in a higher place in life. It's actually another one of I talked about one of our flagships. It's bankingtruths.com/banks. And another one is bankingtruths.com/basics. Basics is 6 minutes. Banks is 4 minutes. We actually look at those two concepts. It's some very early top of funnel content, if you will, for the other marketers out there.
We know that the super wealthy and the Rockefellers and the big companies are using this technique. At what point is it cash efficient for an entrepreneur to start thinking about this life insurance as an investment vehicle?
Sure. If somebody's an entrepreneur, it's now, right? if they're not, like if you're struggling and you're going paycheck to paycheck and you don't have any kind of emergency fund, or you have a lot of consumer debt, I see a lot of my competitors, they're kind of bottom feeders, and they're saying, look, if you have a bunch of bad debt, just get a policy and run it all through the policy. Well, anytime you start a policy, it's just like starting a business or just like investing in real estate. You have to kind of make an investment and take a step back before you start taking some strides forward. And life insurance is no different. Like when I ask a real estate investor, like, well, wait, why did you get this real estate investment? Like the first year you weren't profitable because you paid a commission, you paid loan origination, you had to put in new flooring, paint, and everything else. But you were negative the first year. Like, why would you ever do that? Well, because I'm going to get consistent cash flow and I'm going to get some tax benefits. That's why I did it. Yeah. Same thing with life insurance. It's really the same. If you are an entrepreneur, it's better to sow the seeds now, because life insurance pricing is based on age and health. Never gets better. Right. What people don't understand is what stops them sometimes is they think of it as like a new bill. Like, I don't want a new bill and I'm doing this. And you can actually build these policies to be very, very flexible. Right. And usually when people start, they do have a certain amount of cash that's just sitting idle in the bank, or they do have a project that's cash flowing. If you actually max fund that first year, we can show how if you needed to, you could skip the next couple of years if you had to, because you overfunded or max funded the first year over and above just the minimum cost of insurance. Now, once you really embrace the concept and understand it, that's one option, is just to skip. Another option would be to keep max funding and then borrowing against it, because you can always borrow against 95% of your cash value. Yeah. And then again, you're just accelerating the compounding of this, right? Even if you're using the lion's share of it for your ventures. Does that make sense?
What's the minimum amount I should be able to put in each year for this to be worthwhile? Which then I can, of course, borrow against it, because I'm investing in building software, investing in real estate, investing in other things.
Yeah. And anybody who tells you that you should not do that stuff to do a life insurance policy is crazy, right? Because that's where you're going to make your highest dollar. We find around $1,000 a month is kind of the minimum to get to scale. You can do policy smaller, but actually a lot of people don't realize this. There are economies of scale with insurance. It's not like there's only 4 left on the shelf, Dennis, hurry, right? But there is something called banding. And if you think of it this way, whether you're applying for a policy that's going to cost $100 a month, or you're going to put in $100,000 a month, right? And like our biggest premiums is somebody who's doing $2 million a year. Whether you're doing $100 a month or $100,000, to provide the policy, it essentially costs the insurance company the same thing, right? To actually provide the infrastructure of the policy. They have fixed expenses for the building. It costs to underwrite one body is the same, whether it's 100 or 100,000. The insurance company is able to pass those economies of scale along to you, depending on how much. What you'll find is there'll be different pricing. Like a lot of people have term. What's interesting is we'll see these older policies where they have 250 of term or 100,000 of term. You see that if you got 500,000 of term, like that's oftentimes like the lowest level. And I mean like not a premium, but a death benefit. At that level of death benefit, the insurance company is giving you a lot more insurance or a lot less cost for the same unit of insurance, because they're able to pass some of those fixed cost savings along to you. The next band is usually $1 million, then it's $2 million, right? You kind of have these different bands. It actually is called banding. Just rule of thumb is our company, we really won't get involved unless it's at least $1,000 a month. And somebody can do it for less, but they're losing out to economies of scale. And we spend a lot of time, like all our marketing just drives to Zoom consults, right? And then once you're a client of ours, like we meet with you, we service you. It's not just, hey, see, we kind of have that minimum threshold as far as who we'll take on.
Now, to be able to use life insurance as an investment vehicle in the way we're talking about, you still have to get a life insurance policy, which means you still have to pass a physical and this whole health check. Tell me about that, because I'm sure a lot of our friends are thinking, well, do I have to be healthy enough? And the young adults are thinking, I'm healthy, but I don't need life insurance.
Both of those things are true. What's the biggest buzz right now? Whether it's like in marketing or the stock market, it's 2 letters. What is it right now?
What is it?
AI.
Yeah. Okay.
AI. It's just like you say AI, it's like they talk about it in the stock market. Like, some CEO mentions AI and all of a sudden the stock jumps because they mentioned it on the earnings. It's like, it's silly. Yeah. But believe it or not, AI is actually creating efficiencies with the oldest, stodgiest industry in America, life insurance. There's one company in particular that was really a front runner, and they got involved in it 7 years ago. They had a program where like when you fill out a paper life insurance application, you're not committing to getting a policy. You're not committing to doing business with the agent. All you're doing is simply petitioning the insurance company for a rating, and you're giving them permission to go and look at all your driving record, all your medical stuff. You're basically giving them permission to say, check out all my HIPAA stuff that's protected, HIPAA, HIP, AA. Essentially, what the AI version does is you fill out a DocuSign. It takes about 15, 20 minutes, right? Like you provide your agent with like first name, last name, cell phone, email. Oh, and a zip code. With that, they basically send you a DocuSign. You answer some questions. They go out to the World Wide Web, prescription check, driver's record. And then at that moment, they have the ability to approve you on the spot for up to $10 million at even the highest rating, which it sound like crazy town.
But I thought you need to get a whole physical, need to see how healthy you are, if you have cancer or smoke or drink or anything like that.
Check this out. The insurance company still reserves the right to kick you back to that snail mail underwriting system if they want. But what they were doing for a lot of healthy, and not even that young, it's anybody under 65 who's healthy, where they can tell there's no prescriptions. Well, if there's no prescriptions ever, right? If there is cancer, it has to be really, really new. And what they realize is they could cut out a lot of savings, because when they do the exam, they have to go pay a nurse. Also, they send.
Oh, I thought you had to physically go see another doctor and go through another.
No, what they do is they send a nurse called paramed. They send a nurse to your home or business, and you pee in a cup. They take blood. You answer a bunch of questions.
Right.
And then from there, they go request. You put your doctor. They go request an APS. That's a different service. That's very expensive for them. And then they have a lot of human underwriters.
Right.
That look at all this stuff. The AI system, what it did is it realized that if people have these things that are flags, we can still kick them back to that system. But the people have it that don't, the people that don't have any of those flags, we can go ahead and issue them policies at preferred ratings. And maybe one or two of them might slip through with some brand new cancer, but the cost savings alone from not having to deal with that made up for it. Here's the data that they have 7 years later. Company LexisNexis. They're like, that you've heard of that company, information company, right? Yeah. I think that's part of what Zuckerberg uses to spy on us all and everything. But at any rate, Clearbit, LexisNexis did a study just a couple of years ago, right after COVID, right? Because they were concerned with the COVID. I think in 2022, they found that it was within 97% accuracy. The cost savings alone, they're way ahead of the game at this point.
Even if a couple cancers slip in.
Yeah, they're because of the cost saving. They're way ahead of the game.
If I go skydiving or bungee jumping, Hutch, does that mean I can't get a policy?
It doesn't mean you can't get a policy, but it means you're going to get either a rated policy or it means you're going to get an exclusion. Now, this is what I tell my clients, and that's why it's important to still talk to a human who knows what they're doing. If you have an inkling about skydiving or bungee jumping, then when it says, are you skydiving and bungee jumping? You don't have plans to do that. You have not done that. The answer is no. If you are a skydiver or a bungee jumper, then you need to put yes, and they're going to ask some additional questions. And they can give you a policy, but it may have an exclusion that if you die because of bungee jumping or skydiving, they're not going to pay the death benefit. What they do at that point is they just pay back premiums paid. Like they give you back premiums paid. What I'm interesting about that, Dennis, is most people, when they come to me, especially for infinite banking, is they say, I don't care about the death benefit. And then something like that happens and they're like, but what about my death benefit? It's like, wait, I thought you didn't care. I thought you didn't care. But sometimes you can still get a preferred rating with an exclusion for that. Sometimes they won't. Sometimes they'll just give you a rated policy or they'll just decline based on the information. And to give you the full gamut, it would be like rock climbing, bungee jumping, skydiving, auto racing. I'm trying to think of
any kind of extreme sport that could kill you.
Yeah, but like I have clients that have Harleys.
Skateboarding.
No.
Mountain biking.
No, not that. No.
I'm doing an Ironman in 6 months.
That's all good. That's all fine. It's the stuff where, like, I used to say this with my kids, like when they fall and mom would get really sad. And I go, it's really good that our kids learn to have a healthy respect for gravity. Anytime where you're like challenging the healthy respect for gravity, they kind of take issue with that.
Right. We could fall and die. Yeah.
Yeah.
We've got a lot of agency owners in our space, a lot of consultants, a lot of coaches that are in our community. Where might this make sense for them and where wouldn't it?
Again, we talked about kind of the basic use. Like if they have key employees, just like big banks actually have these policies. It's not just like they own a policy. It's actually tied to executive benefit. If you have key people that are, it would affect your business, not only if they died or got too sick or hurt to work, but if they left to another company, setting up what are called golden handcuff programs can absolutely make sense. For the entrepreneur themselves, where they're going to sell business units or they're going to have an influx from doing a product launch or whatever, and they're just going to sit on cash. Like I used to remember when Frank Kern talked about being a cash millionaire. It's like angels in heaven were crying, like, bro, please don't keep that much money in cash. Like, be your own bank. Like, that's just crazy town. Like the opportunity cost of that. Like I said, like, even if you get 5% and you're going to now give half of that or a third of that to the government, it's like you could be much better. Not only that, but next time you have a project, right? Instead of withdrawing the money and like resetting your compound curve, let's just borrow against it. Even if it's a wash loan situation, you maintain your place on that compound interest curve. And when the product launch is done, right, you pay down the loan, you're at a higher place in line. It's a much more efficient way to do things. But those are the two most immediate, is to do it on the business owner themselves, their family, right? Sometimes once they get it, usually they start with themselves and they're like, well, wait, this is pretty cool. And now I got even extra cash. But that's the other thing that people don't realize. You can't put unlimited amounts into one particular policy. Do you know why? Do you know who sets the maximum?
I don't know. Is it based on what you could earn or what your life is worth?
Yes, that is who sets the minimum. Who sets the minimum is the insurance company, right? And they will give you a maximum amount of insurance based on what you qualify for. But let's just say what they give you for the maximum, like if you're allowed to get a $5 million policy, the IRS actually sets what the maximum amount of premium put into that policy. And that'll tell you something good is going on there, right? That's the reason why Walmart was like, ooh, wait a second, right? It's because when the IRS sets a maximum on anything, something good is going on there, right? And so if you're capped out on your own policy, you would either have to do what you said, Dennis, or you'd have to petition the insurance company to say, hey, I'm making more money. Do I qualify for more insurance? And if you do, then you can find out what the maximum amount of premium you could put into that policy is. But the next place to go is you can get a policy on your immediate family members, even a non-working spouse, because if a non-working spouse were to pass away, you as the entrepreneur would still incur a loss, because you'd be distracted, right? You can get policies on the non-working spouses. You can get policies on children, right? The family, immediate family is the immediate. And then the next, or it may be more important to some people, is to have it on key employees.
But I can get policies on my key employees without them knowing or without them going through a health check?
No. After the whole Walmart thing, if you do get a policy on employees, you may be able to do it without the health check with the AI, but they have to sign off saying, hey, I understand that Dennis is buying a policy on my life, and I'm pretty sure he's not with the Russian mob. I'm okay with it, right? Like they still have to consent to having some outside entity own a policy on them. Yeah. But a lot of times they will, especially if it's tied to some kind of golden handcuff executive carve out bonus program.
And I could do it on contractors or VAs.
No, that's a lot tougher. Yeah. It needs to be somebody who's an employee. No.
I remember I had Dick Hayen as a mentor of mine, and he was the chairman of Allstate Insurance.
Okay.
And he told me that there's a weird thing that occurs in life insurance where on day 366, after people get a policy, there's a little blip in the suicide rate, because some people get a policy and then they commit suicide, doesn't pay out. They have, I don't know if it's changed.
Yeah, no.
Like the first year you can't commit suicide, but then there's all these people that think that they've waited that long that on day 366 they commit suicide or something happens to them or someone kills them or whatever. Now that policy pays out.
So that's very interesting. First of all, if anybody is contemplating suicide, I had a very close family member do that. I recommend you call Suicide Prevention Hotline ASAP. What Dennis is talking about, though, it's actually called, if you did that on day 366, your family would only get premiums paid. But if you waited till day 731, 365 times 2 plus 1, if you waited to 731, and I did not know that, it wouldn't surprise me that they're on.
Mortality tables or whatever, the actuaries have found that. It just seems like a very morbid thing that someone would have planned it that far ahead.
Yeah, no, it makes me really sad to think about. The only thing I'm thinking is at least that person, like as sad as they were, because when somebody takes their own life, a good friend of mine has a great saying. He says, they chose a very permanent solution to a temporary problem. Like as much pain and suffering that they're in, what I would say as a survivor of suicide, what I can tell you is you struggle a lot with that afterwards, like where it's just like you start to, you're right, like contemplate life in general. And you start to contemplate like, oh, could I have done something in your own worth and everything else? Like, oh, I didn't mean. And what I can tell you is if somebody did do that, at least it showed that they loved you enough to wait 731 days because they wanted to set you up. But yeah, what you're talking about, and this actually ties back into like we don't want to bring the room down, but just to tie it back to the rock climbing and all that stuff. It's called the exclusion. It's 2 years. And again, I'm not suggesting that people do this, but theoretically, one could lie through their teeth and like lie that they don't skydive. They could lie that they don't rock climb. They could lie about like not having a triple bypass 4 years ago and the insurance company doesn't catch it for whatever reason. The insurance company has 2 years to figure that out. And if you die within the 2 years, they can really, before they pay the claim, go and make sure that everything was clean. Now, there are cases where people lied about being a smoker. They were a smoker and they said they weren't. This is interesting. The insurance company cannot take away the policy. But what they can do is they can readjust it and say, look, we found out you were a smoker and you knew it. And you said, we can't disallow the policy, but we're not going to pay you as much death benefit. We're going to take the premiums you paid, run those through smoker rates, and that's what we're going to actually pay you. But if 2 years and a day go by on 731 and that person dies and they find out they were smoking, heroin using, skydiving, naked bungee jumping, whatever, like you could do whatever, like you could be whatever. On day 731, they have to pay it just as it was. Does that make sense?
Oh, they have 2 years to figure it out. Okay.
Yeah.
That is wild.
We went off the rails there. Sorry, everybody.
What is the most typical situation that you see?
The most typical situation I see, like usually people hear of this stuff from like it's through other agents. I guess there's radio ads. There's other marketers like me. People hear about it. It does sound too good to be true, right? It's a very bold claim, but people are like, well, gosh, if it is true, when would I want to know about it? And they take to researching. You brought up, thank you, that we do have a lot of information. Like unlike a lot of our competitors, I love writing. We actually have a lot of ranked content. What's interesting, you brought up Allstate. I used to have the #1 article for the infinite banking concept. And Allstate, of all people, jumped me, which is weird because they don't even sell a whole life product that would qualify for it. And even their universal is not indexed. So it's like probably Allstate hired some blogger and they just said, anything financial related, make sure we're there, right? And so and now Nerd Wallets kind of jumped in there, but you go read their copy and it's trash. It's just like super sterile, kind of vanilla trash. But at any rate, you find us all over the place. What we find are people that are researching and they have questions and they just want to know what's up. When they read our stuff or they watch our videos, they see that we kind of go over and above on the transparency meter because like I learned this from Ryan Dice. You don't want anybody on your list who doesn't want to be on your list. We don't want to be spamming a bunch of people, but it's like, if you are wondering if this is for real, we know we have the truth on our side. And if you're an entrepreneur, like your fact pattern, like we know where your mental place lies. Like Will Rogers, you're more worried about the return of your principal than the return on your principal. Cool. Like we're not trying to beat the stock market. We're trying to beat the banks, which is pretty easy to do because that's what the banks do. Essentially, what we're doing is cutting out the middlemen. So what we get are people coming through who have heard about this. They watch our stuff. They realize like, okay, these guys are pretty straight up. We're going to talk to them. We answer their questions. We kind of get their fact pattern. We do a couple calls with them. One, just to kind of understand what we're dealing with, answer their questions, get enough. We can model something true to life for them. And then they get to decide if that's something that works for them or not. That's our most typical situation.
So Hutch, you and I are digital marketers.
Yes.
Unlike most of these older people that sell services. And you're not just saying that you help a lot of people use life insurance as an investment vehicle, but I can see you rank #1 in Google on why IUL is a bad investment. And there's 9,700 people a month that look for that. And you get 35 118 people because you rank number one on that. You rank number one on how to be your own bank. You rank number three on be your own bank. You rank number one on is IUL a good investment and all of this. And there are 4,800 people a month that are searching for max funded IUL. There's 1,300 people a month that are searching on infinite banking concept, which is a keyword difficulty of 22. And you have all this. There's a lot of people that are trying to rank on the keyword that they want to rank on. Dallas, emergency HVAC, air conditioning repair, whatever it is, right?
Okay.
But what is it that you're doing that's causing you to well on these very competitive terms?
It's awesome that you asked me that, because we know that Google's changed their algorithm, and sometimes we wonder. We try different things. Like, you see our domain authority is not super high, right? With a fairly low domain authority, we rank. And nobody knows what the special sauce is, but what I think it is, Dennis, I think it's this. And for those that can't see, I'm holding a phone and I'm just moving my finger slowly from the top to the bottom.
Yeah.
I think Google sees that when people get into our content, they slow scroll through our content.
I'm pretty sure that's what's happening.
Yeah.
Did you see that in their whole Apple lawsuit with the DOJ? They had to reveal how their search algorithm works. And the
I did not see that. Where can I?
All this, I'll send you a link to it. It's been...
That'd be wonderful.
All of these SEO people have gone crazy poring over the court documents because Google...
Yes.
But I'll send it to you after this. But the key thing that we all suspected, which was confirmed, is that actual click behavior is more important than your... I think you only have like a 23. You have like a 23. You have a 28 domain rating, which is like... I thought you would have been 50 plus for the ratings that you have. But it's the fact that your content helpful, because Google literally has said they're looking for helpful content. They've defined it in the 170 page quality rater. They're looking at click signals. So when people are scrolling on your site, when people watch a video, when you embed rich media, when you have infographics, when it's just easy to read, when your site loads fast, all of these things providing a good user experience that keeps them there on the site and they read your related articles, that actually, even if you don't have links to it, even if you're not Allstate, that's actually the strongest ranking factor.
Well, thank you. That's always been our suspicion, and that's always been our guiding light is the experience. Right? It's because honestly, like, I love that saying. I think it's JK Molina on Twitter says, like saying cash. But like, I could have a gazillion hits, but if it's not translating to customers who want to come and talk to us about this concept, right? And the right kind of customers who it's going to resonate with, it's useless to me anyway, right?
You know how I can tell whether your SEO is strong? Is I look at where the traffic is coming. Someone where their SEO is weak, their homepage is like all their traffic. And after that, it's like nothing. Your homepage is nowhere in the first 20, 30. I think it's almost like 30 pages down.
Because they usually find us from some topic. And we have a lot of content and a lot of different topics.
You're more of a publisher. You're a services business, but you much free content out there that's actually what's driving it. People see you as an expert instead of like a salesperson to get on a Zoom call with. This your number one article, which is on why is IUL a bad investment, is driving 4,000 visits a month. And if you were to buy that, it would have cost you $3,700
a month.
A month.
Yep.
And then number two is infinite. I know I've asked you questions about infinite banking. I wonder how many times you've answered this question on what is infinite banking, but it works. And because of that, you rank on how many? 481 keywords related to infinite banking concept, just on that one blog post alone. No, I'm sorry, 508. That one blog post you wrote on infinite banking ranks number 4 on infinite banking concept, ranks number 1 on problem with infinite banking concept, infinite banking strategy, what is infinite banking policy. And not only are you ranking in regular search, but you are showing up in featured snippets. People also ask, video, image pack, the new discussion and forums you're showing up in. And you're about to show up when Google releases this a little further in the search, the AI generated results, which is their answer to ChatGPT, which we think is probably going to happen in July. When OpenAI releases GPT-5 and Sora and these other pieces, Google's going to try to preempt that by then rolling out. And I asked some of my friends who are engineers at Google, Why don't you roll out SGE a little further? Because it's good.
Yeah. And let me ask you this. Are they going to attribute when they do that? Are they going to attribute?
Yeah, they already do. Because if you see in Gemini, so do you remember when 2 weeks ago, Google released Gemini 1.5 Pro with the million tokens as the context window?
I don't. I'll be honest. I much stuff.
It's hard to keep up with all the stuff, right? But the reason why Google made the announcement on that day, was because they were trying to take the wind out of the sails of OpenAI and the Microsoft announcement.
Hey, let me ask you this, because should I even worry about SEO? Is like, are you saying that SEO is going to die? Like,
no, this is so the whole SEO community in the last 3 weeks are like cockroaches that are scurrying everywhere
because of the court case.
That, and then the March 2024 core update that got released absolutely pounded millions of websites. And of the millions of websites that got pounded, not one was able to get a re-inclusion request approved. In other words, they were not one. This has never happened before in the history of SEO. Not one has ever been able to get their site back once they got hit with the penalty. So
I didn't get slapped.
People are going crazy about, oh, Google's trying to kill us, and they're trying to use the AI. They fired 30,000 contractors that were manually doing this, because Google has 30,000 contractors that literally look at search results. Those are called the quality graders, and they're not just people in India, right? These are humans.
I did not get slapped, correct?
No, you didn't.
Okay.
The long and short of it is, it's good and it's really bad, the changes that Google's making for people that actually have good content, actually have experience and expertise and authority and trust, which you do. Ding, 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 ding. When Google switches over to SGE, which I know sounds like I'm saying all this technical stuff, but basically, like,
I'm going to go up. My stock price is going to go up, right?
Yeah. When the bank is better at catching thieves, actually, I don't want to use banking because that's like a bad example here. When the safe manufacturer is better at catching thieves, then the honest people do better. The thieves, though, they don't like. Is this upcoming change that's being rolled out good or bad? It depends. Are you trying to trick Google, or are you trying to actually help your users with helpful content, with EEAT, with PAA? And you do. So that's how the people with 24 domain authority make it. We want Google to accelerate this. This can't happen any faster.
Yeah.
And in the world of finance, which is super competitive, which is a YMYL category, right? It's your money or your life, that you're in that category. Any advice or that YMYL is a more scrutinized category.
Okay.
Because people are making decisions on what they're going to do. I mean, this is important. If it affects people's lives, you're doing the right thing. When Google starts showing these colorful boxes as the search, instead of the 10 blue links, but they start serving these colorful boxes, like when you search my name and you see all those colorful boxes, that's going to be dominant in search. It's going to mainly be like that, because the reason why these AI, LLM generated things are good is because they give you the one consolidated answer, right?
Nice.
Instead of you having to look at all these things and try to figure it out from these 10 links, they give you one answer that was tuned just for, even if you and I issue the exact same query on best place to go eat, we're going to get a different answer, not just because we're in a different location, but because you and I have a different idea of what a good meal is. You and I have a good, if I ask, who should I have on my podcast next? And you ask the exact same question, we're going to get a different set of recommendations, because they're going to know who's been on your podcast, who's been on my podcast, and make a different set of recommendations. Google is best. This is the last thing I'll say before, because I don't want to go on this whole like high horse and lecture you. But Google has always been in a dominant position in terms of computational power and AI to be able to just basically pull the rug on anybody if they wanted to. But they're waiting to roll this out. The people that do good work, the people that actually have the knowledge, and this goes back to EEAT, you actually have the experience because you worked for some major financial providers before. You've been doing it for many years. You have the freaking cred and the proof and the trust and the stories and the network, and you have all of that, right?
I actually just put, I recently redid my homepage, and I kind of put 4 pictures of, I call it my alphabet soup, like that stuff back there. You should put that on there.
Yeah, because it increases your credibility. Yeah. Because with all these people just generating AI articles on the 10 things you need to know about IUL, how is Google determining that your stuff is legit and showing your stuff versus all the other people that are using ChatGPT to generate all kinds of stuff and now generating images and videos and all that, right? How can they tell? because they're looking at your actual experience. And I'm not going to go to the page, but if you do a search for Google EEAT and you read their guidelines, it says, do you actually have firsthand experience doing this thing? Are you actually connected to the people when you're with Caleb Williams and at that Better Wealth conference, and when you're with all the other people in the space, and we can name drop? Do you think Google can see that? And do you think that counts?
It sounds like it would.
Do you think it counts more than links that you may have bought, or not that you buy?
Of course it should.
Or any of these SEO tricks that you have, or fancy plugins, or distributing.
Those are the people that they slap, right?
We like this. The folks we're working with, their SEO is improving. And it's not because like we're doing good SEO. It's that the people that were doing bad things are getting penalized.
It sounds like what you're doing is you're validating. I just wrote it down, EEAT. It sounds like what you're doing.
I've been preaching this for 15, 20 years.
But that's what I'm getting from you, Dennis, is that you help people with SEO and you know about all the tricks or the thievery, and you're saying, let's not do thievery, but let's just figure out how to bolster what Google's looking for, which is EEAT, correct?
Yeah. And finally, people are coming around. So the top people in the world of SEO are finally saying what I've been saying forever. And they'll say like, oh yeah, well, if you've been penalized, then consider like who actually is ranking and see like from the eyes of the user, what is actually helpful to them. And would this help you if you had this particular kind of question? And what are the related questions that people are asking? You do a search and it says below, people also ask, answer those questions. These SEO people are telling their other people in their community, the top people in the community are all saying, we'll try to give the user what they want. And think about how they're thinking about things. And they're only now coming around to the way you and I are thinking about it.
What do you know? I have to go. So I would love to keep talking about this, but
let's do round two in Vegas. Let's get some meat and we'll do a live podcast.
That sounds really cool. I am actually going to a pickleball game now. And if I recall, you live somewhere near Sunset Park. I don't know if you have
that's
any
not very
interest.
Far from here. I'm slow and I'm not very accurate, but I'd love to play.
That's okay, because I know both you and I have worked on limiting our consumption of food because we're both foodies. We both like to eat. But the other part of that formula is exercise. But it's kind of like what we were saying with SEO. I don't like exercise for the sake of doing exercise. And I know there's drugs and stuff I can take. But I'd rather just exercise where I have fun. And it might be fun for you.
Let's do it. And I exercise so I can eat more because calories, calories in, calories out. Let me know. I think we booked a date. Was it I forgot what date we said, but we'll see you on that day.
Monday the 22nd.
That's right. Yeah.
Love it. Thanks a lot,
awesome,
Dennis.
Hutch.
Thanks for having me on.
Appreciate you so much. Thanks for being on the show.
See you, man.
Bye.